Hi, and welcome to another market analysis video for premium members. So we're going to start off looking at where the indice is at this present moment. This here was Friday's activity. Each one of these boxes is another day. And let's go back here to the recent highs. And this was in March 23rd, a couple of weeks ago. And we had this pretty drastic drop to the bottom of the range, 17,600. It closed around 18,056. It was nice to see it close over 18,000. So clearly, having broken out on Thursday afternoon, this magenta line, it's a 30-minute chart you're looking at. So this magenta line was something that we wanted to see happen. It clearly held some of the rallies, and it went up and down through it on Wednesday of last week, and then a couple of spikes. This is the day of the FOMC revision, and then again another one of these nasty candles where it trades up, down, long shadows. We don't like those. Are really volatile candles. But net towards the end of the day on Thursday, even though the volume wasn't overwhelming, the market pulled itself together, rallied up to close on the highs Thursday, and then Friday. It's just a strong day. No other way of looking at it. So net, should we be able to hold above 18,000 in this new week? Even a pullback to the 17,926 magenta line, the market looks favorable for an assault on the 18,200 highs. And I don't, it's 150 points. That could be on the open for all I know on Monday. So again, something to keep in mind. We have been in a relatively long sideways trendless market. And actually, as I'm going to show on the daily chart, since Thanksgiving of last year, we're basically right around that level. So this is the 30-minute chart, and net again, it concluded the week on a strong note, and it got above some of these highs that were hard for it to penetrate. Okay, so this is the daily chart for the Dow, and I guess on the daily chart, these bottoms here around 17,650, each time it looked like it was going to cave, and to be honest, we thought so too, and perhaps prepared for that potential, especially with the 20-day, the red 20-day moving average, kind of coiling around the 50-day, the green one. And net, it did what it had to do. It held, and at least at this point, it looks like the 20-day, the red is turning. It's going to turn back up. So let's see what happens. As far as highs of consequence, again, the 18,200 level here, this candle, and the high on March 2nd. We're watching for that. Just to get to that point of the market has been sideways, this is Thanksgiving time, right around here, and that was 17,864. Until Thursday and Friday, that's exactly where we were, and then Friday we closed above 18,000. So it's not the first time it's closed above 18,000, but we've done some work here on this pullback. So down channel, break out of the down channel, explosion to a new high, pullback, and then consolidation, spring-like action. Let's see what happens. We do get a signal that this is going to take out these highs. We have a lot of candidates to choose from. Let's look at some more. The first stock we're going to look at is ELNK, which is EarthLink Holdings. Eric, Larry, Nancy, Karen. This is a weekly chart. So weekly charts have a degree, an extra degree of significance, especially if you notice a pattern. You really can get some really sustained moves. And I think I pointed this out, I'm pretty sure I did, in a prior video, that kind of have an inverted head and shoulders, left shoulder, head, right shoulder. It's on an angle. This this burgundy line, magenta, I guess. This magenta line would be the neckline, and it comes over around $5 or $4.90 area. Let's move in a little bit and take a look and see what happened in the last week or two. So this is clearly a stock that's been in a extended down move, and it's our feeling that this could be a breakout attempt. This was last week. Volume was okay, a little bit less than average, but nothing horrifying. And so that's volume, or it was okay, the volume. And this neckline here at around 465 for this magenta trend line right here, not the neckline for the inverted head and shoulders. Got through it, got as high as 480 and settled around 465, 467. It's been trading around $4.70. We like this a lot for a nice longer term hold. Potential. Let's take a look at where a potential move could go. Hold on. So this is a more crunched up view of that weekly chart, and simply drew Fibonacci retracements from the high around $8.57, which was in May of 2012, and this low here, which was I guess around October of 2014 at $3, and that's what we've broken out of, and that's what we have, this congesting, consolidating area that we're kind of excited about. In the least bit, a 38% retracement would be around $5.15, which good 20% move from here. That wouldn't be bad. And we tend to look at also 50% retracement, which is 580, and even the 62% retracement around $6.25, which gives a bunch of bottoms down here anyway. So this is ELNK, and we'd like to see an expansion in volume and more of a pronounced move above the neckline. So this is Neonide, N-E-O-N, Nancy, Eric, Oregon, Nancy. And this chart, basically, this is the weekly chart again. And the breakout around 345, we initially got involved around 3.25. Had a really strong week last week. We sold a little bit. The high 430 closed at 405. It's a tricky one because there is definitely strength and accumulation going on in this name. Yet it can pull back to the 350, 360 area, which in a lot of ways would be great because we would clearly feel more comfortable buying in that area. But this is one that we're going to be keeping our eyes on, NEON, because there's a bunch of bottoms up here around 5.5, and good 33% higher than here, which is wonderful. So NEON, one that we'll be watching closely. This next stock that we are holding is Zogenix, ZGNX, Zebra, Gary, Nancy, Xerox, xylophone. Anyway, I don't know, this one is kind of petering out a little bit. It's above where we got involved. This is a weekly chart again, and this is the 50-week, around 155. Also, there's this trend line, this magenta line around 157 or so, coincides a little bit with the moving average line. Clearly, something went wrong if it goes from $2 down to $1.20 4 weeks ago, and we are firm believers in concern and respect that something unholy is going on in this stock. So our patience, will be watching a little bit. Would not be surprised if we do start getting some activity on the momentum side. We will hang with it, If not, we will not hesitate to take our little profits and go on to the next. The next stock we're going to look at is Novavax, NVAX, Nancy, Variety, Allen, Xerox again. And this is a weekly chart. And we were able to pick up some nice accumulation the other week when it dropped so precipitously based on the financing, I believe, if I remember correctly. And the whole episode of insiders getting a chance to lock in $2.50 on that corporate financing event. Anyway, we don't dwell on the past. We're looking forward to the future. There's an upstroke. There's a definitely, the stock is clearly in an upswing. Let's draw in Fibonacci lines, which we happen to be big fans on. It's not an exacting science, but we've gotten decent at putting this stuff up. So as far as pullback levels go, it did touch the 38% area, $7.52, where we got involved. A 50% movement would be down to $6.85, and then a 62% retracement would be down to $6.16. That's just levels to keep in mind. We try to see where levels run into other indicators, and right here, 23% drop from this low to this high is also where the 20-day moving average is, which is also where last week it kind of closed at. Just food for thought, something to keep our eyes on. As far as our proprietary indicators for any of these stocks, this one is very neutral right now. So again, we're technicians. We like knowing what the stock does for their livelihood, but we base our decisions on signals, nothing else, nothing more, nothing less. So this is the weekly chart for Glue Mobile, Gary, Larry, Unicycle, Glue, GLUU. And again, a similar structure to some of the other potential breakout stocks that I showed in this video so far. We like the breakout, the strong bullish candle. The pullback held the 20-week moving average. Each week after that has held. The prior week before, it was a little bit of a breakout, although volume, again, is nothing to write home about. It's not horrible, it's not great. And then last week, again, we're waiting for this to get above this level, $5.12, $5.13, and hold, which, by the way, was support when it was trading at $5.50 and higher. Broke through, ran down, rallied a little bit, took everyone back, faked everybody out, and then bang, an event right back to this 512 area. So we have our eyes glued, no pun intended, actually pun intended, on this particular stock. And ideally, it'll mesh with our proprietary volume filter and indicators, and we'll come up with a really a double whammy alert, and this one will run because there's resistance slightly at $5.50, 10% higher, but as you could see by this major drop, there's nothing above that until like $7, and that would be wonderful. 25, 30%, better than a poke in the eye. So that's it for this week's session, as far as a review of our holdings, some of our holdings, and what we're looking for next week. See everybody in the markets. Bye. Hi, and welcome to another markets analysis video from thestealthytrader.com. So let's take a look. Let's jump right into the charts. And this is the Dow 30-minute chart. And the first thing that I want to point out is what we've all experienced as the sideways nature of this market for the past, at least past 2-3 weeks. We had this recent area here back on the 23rd of March where new highs were made. Then we had a nice little drop in the next 3 days, down to the 17,550 area. Then a series of compression highs and lows, rally followed by drop, rally followed by drop, so forth. Rinse and repeat. It's a little bit treacherous, but of importance to note now going into the new week, note this magenta trend line. This is Thursday's activity right here, and Wednesday and Monday, Tuesday, Wednesday, Thursday, Friday. Each one of these squares is a day. And this was last Thursday. We had Friday off, and then Monday we had results from the labor results that caused a spike down to this 17,600 key area that I alluded to. And then we had a nice rally. Once you get a candle like this, it's pretty bullish. And clearly the market rallied on Tuesday. Again, the end of day pull off. Nothing so horrible. Wednesday immediately on the open. And then as Wednesday proceeded, we had release of revised job numbers for the FOMC, disappointment. And that dropped. That was a speech by the head of the FOMC, and those are very confusing. So a couple of these candles here that have long shadows and a very small body, it just shows total lack of conviction on either direction. Then a pullback at the end in the early morning of midday of Thursday, which threatened again to take out the 17,800 area and perhaps retest 17,650. Yet the market managed to pull itself together, and this is the key area right here. This candle and on into Thursday afternoon, a nice strong rally. Friday was just a solid higher day. Volume has not been anything impressive, and there's a lot of concern among market watchers, and including us, that kind of like, prove it to us that this is another move to the upside, another leg of the bull market. Too many times this is faltered, and everybody rushes for the exits. So this is a 30-minute chart. Let's take a look at what some of the targets are, and we'll look at a longer-term chart. Okay, so this is the daily chart for the Dow, and here again is an example of what I was referring to. All these bottoms here around 17,600. We closed at 18,057, and in particular Wednesday, Thursday, and Friday, and we got above this 18,000 area, which is always key. To close above it is always key. Add some starch to next week's open, and an attack potentially on 18,150 to 80, and then the all-time highs here, 18,288. So the market made these highs, came off, and this could all potentially be looked at as consolidating, but we have to have a consistent move above the highs for us to get excited again. And just an observation here, this is Thanksgiving, this zone right here, and until Thursday we were still at that same level after all these months. If you draw a line across the middle, it's just kind of disheartening, but it's the reality of what's going on. Let's see what happens if we get a breakout. It's gonna be a wonderful thing for all of us. Okay, let's look at some more stuff. Okay, so one of the first stocks we're going to look at is Coronado Biosciences, CNDO. And, it's the kind of thing where this breakout here goes back to March 31st. And how many days? 1, 2, 3, 4, 5, 6, 7, 8. 8 days of sideways trade. Get flashes of optimism as far as some kind of breakout here, but only to have these annoying pullbacks, and something that we are aware of. Their support at 375, which, from $4.12 where it closed, maybe not the most desirable risk-reward entry. We are also closer to a potential breakout above 430 area where it got to Friday morning on the open. But we're kind of constructive about this name, more because of the longer-term chart. So let's take a look at that. Okay, so this is Coronado Biosciences. It's a weekly chart, and a little bit of a better example of what we kind of like about it, why it's of interest to us. You have this breakout from back in Thanksgiving time, a nice pop for an extended period of time, and then we had a more aggressive run. But you have a lot of these really dangerous candles. I mean, look at this. This went up to 530 and it closed at 387 or 390 on this week. I mean, this stock is not for the faint of heart, but when it moves, it really does move, and there's a decent short interest. This is last week. So we got a bunch of highs here around 440. We'll be watching this one. One of the reasons to consider our premium membership is, sometimes the sweetest tasting fruit are the hardest ones on the tree to get to, and it's important to have that guidance and the input via our alerts as to if we see an overwhelming signal, even though the chart might not encourage the ideal risk-reward entry. We have a variety of scripts and indicators that help give us the strength, if that's the right word, to the conviction to get in. And when one of these, like Coronado, does take off, if you're not in it, the train leaves the station very quickly. So this is an example, CNDO, and this one is very much on our list. And these are the highs that we're looking at, $7.60. That's another reason. There's not much there. You got that gap area, which it kind of filled that day right here when it had that week, when it had that crazy range. But $5.30 is another dollar, plus 20% from where we are. Would not think it's out of line to consider a move to this area, 530s, should we get some consistent move higher. So this is a weekly chart for ELNK Holdings, ELNK, and just something to note here, this inverse, potentially inverse head and shoulders, left shoulder, head, right shoulder getting a little bit extended on the right shoulder, which is a concern, something to keep in mind. But this last week, this is a weekly chart, we had a nice attempted breakout. Volume is kind of weak. I mean, then, in general, as the indices go with regards to interest and volume, we gauge all these things. Relative volume is the index today moving with the intensity that it ordinarily does. Is it 20% less? Is it 40% less? Is it 40% more? At 10 a.m. Eastern Standard Time, what percent? So these are all things that are part of our system. And to be honest, a lot of the stocks and the indices in the last week or two, it's a holiday week, holiday shortened week, it's been kind of anemic. And there could be a lot of reasons for that. Strong dollar causing other exchanges around the globe to be relative gainers on our own exchange, to be like the China, the markets in China, the Chinese exchange is quite honestly kicking our ass as far as relative performance is. So there's a lot going on. Most of it, all of it, we can't control. All we could do is deal with in our own space. So we like this name, ELNK, and so I'm going to conclude on that note. Net. We want to see the markets, really make a case for the move towards the end of the week, Wednesday, Thursday, Friday, that seems to indicate that we're about to make an assault on recent highs and all-time highs. We want to see some conviction. We want to see some volume. We don't want to see the volatile, painful retreats. One day, 2 days, 6 days up is obliterated in 1.5 days on the drops. Enough of that already. We are ready to move forward and take out the old highs and get some juice back in these markets. Definitely consider demoing our service, because should that happen, we have a bunch of candidates percolating in our filters that we apply to our candidates, and it's definitely the place you want to be. Could pay for your entire membership in one trade. Again, thank you for joining us for this basic members video, and see everybody in the markets.